right. Hey there. Good morning, everybody. It is a little bit cooler, rainy morning here just north of Houston, Texas, Lake Conroe. Good to have you in. I'm Christopher Inks with Texas West Capital. And as we do every week, we're going to take a look at some charts. I'm going to give you a lot more in trading education than you probably realize, at least at first. I'm going to tell you, listen, after all this time doing this, all these years doing this, I'm going to let you know what I think is going on and where I think we're headed. And from there, we'll see what happens, right? So far, it's been a great year. Man, I've called so many bottoms, guys. I was talking about Bitcoin down at 15.5. Talking about Ethereum last June of last year when it had its low. We talked about the DXY hitting the high there. Of course, I gave that when I talked about the low back in January of 2021. I gave that 114, 115 target, and we hit that. Man, Link at 5.5, somewhere right around there. Sol at Solana at like 9.5. December 30th of last year on the Wendy O show. Facebook, Meta, GBTC, and all these right there at the lows where everybody is worst out of it, right? Carvana, we were looking at it being a low there below 10. Just so many. So I hope you guys have been following along. I hope you've made some money. We had MicroStrategy just recently, had some great calls on the Wednesday show I do with Scott. Scott Melker. We had an EGLD a week ago that rallied up like 80%. And some other ones. That was the good one there though. But man, and we do so much more of this at Texas West Capital. So, if you guys would really want to learn, we do professional trader education. It's not a run-of-the-mill it's not a paid crypto group or something like that we seem to get lumped in with because I often talk a lot about crypto. It's actual real professional trader education, guys. What I really focus on is market forecasting. As a day trader, most people are not going to get wealthy. Okay, there are a few every once in a while they do, but it is very much the exception, not the rule. If you want to create generational type wealth or something like that, with trading, you really have to learn to forecast markets. And you get in at those bear market lows. You use risk management properly, and next thing you know, you got multiple trades running hundreds and hundreds of percent. And that's how you do it, guys. That's how you do it, but with minimal risk. Everything we do, first and foremost, is based on proper risk management. Okay. So anyway, we'd love to have you there. We do have a professional group coaching that we do. That's 3 live streams a week, Elliott Wave Theory, Wyckoff Method, and price action. Because we also teach you price action, right? So if you want to day trade, you can do that. But you can also use the price action concepts to really understand, to give you some confirmations when you're looking at possible reversals and pullbacks and stuff like that. But yeah, so that's what we do, guys. I don't think a lot of people really understand that. Again, I think, the crypto space, there's a lot of nonsense, a lot of BS that goes on there. And anybody that's out there trying to give some real information and, and give some real trading often gets lumped in with the nonsense. But hopefully, all these posts that I do out there, kind of show you guys, listen, we know what we're doing. Okay. But anyway, we do that. So join us there. We'd love to have you there. Members.texaswestcapital.com. So good morning, everybody. Bitcoin has been rallying, and it's starting to rally again this morning. Ethereum is up against its major resistance there, guys. And remember, it wasn't too long ago, everybody was absolutely downtrodden about Ethereum, right? And so, are we on the cusp of Ethereum kind of breaking out and really doing what it does every cycle, right? Bitcoin is the safe bet. Every cycle, Bitcoin is the safe bet. And you're going to make a lot of money trading Bitcoin, right? But your alts, of course, higher beta, so they're going to, give you potentially a lot more return. Because depending on the alt, it's a lot more risky, right? Cryptocurrencies in general, cryptocurrency trading in general is risky. I would say probably riskier than most trading. But that's what draws y'all to it, because you see the opportunity to get big gains in short amount of time. But you have to understand that. You have to recognize what you're doing, all right? And so that's kind of what we talk about every week here, as well as everything else we're doing here. So good to see you guys. Sass, what's up, buddy? Deadly123, what's going on, my friend? Andrew Bennett checking in. Is that Augustin? Says checking in from Buenos Aires. So good to see you, man. Is Rainy there too? This time you put here at X doesn't go unnoticed. Know that helped me a lot in the psychology part. Man, I love that because, guys, listen, thank you so much for saying that, because what you guys may not understand is the psychology, the emotional understanding is actually the biggest thing outside of the actual trading, right? That's going to be the determinant of whether you are successful over time as a trader. A lot of people kind of pass it off because they don't really understand it. There's a lot of just mouthing of words. People are like, oh, you know, they say the psychological things. They really understand what they're saying, right? To get a true understanding of where you stand emotionally and psychologically is going to help you out just in tons with doing it. Because here's the thing. Any monkey can learn how to trade, guys. Okay, maybe not monkeys, but what I'm trying to say is anybody can learn to trade, right? There's rules, there's guidelines, you follow them, boom. The problem is if you don't understand the emotional or psychological part of it, it doesn't matter how well you understand the rules and whatnot, because you're going to screw it up. Your emotions are going to kick in. You're going to you're going to get to that point where you're supposed to stay in and you won't. You'll get scared and you'll get out, right? Or that you're supposed to get out and emotionally you're going to be staying in that position, and it's going to turn against you and you're going to end up losing money, right? So I really appreciate that people are picking up that psychological, the emotional part. There's very few people out there actually talking about that, because most traders out there don't understand it, guys. Okay. Let me see here. What's up here? Matt's Trades. What's going on? Sword is here as well. The Tiger. Good to see you. Good to see you. Happy Friday. Sats McGee says, don't forget link. Yeah. We had that link down there at 5.5. And that was the one I was leading you guys into that. We're going to take a look at these charts today, by the way, guys. Okay. I posted a few of them there on X. We're going to take a look at them here and have some discussions about them. But yeah, link was that one where, we had that long accumulation. And I told you guys, I explained it on here a few times. And I said, listen, this looks like accumulation. Here's why. And I said, it looks like we might get a spring here, which is this drop down, short drop below the range support. And when we get that, you guys want to buy that. And like I said, if you had bought that around $5, $6, we're up around $15 now, guys. You're up 200%. And I think that was what, June? So a few months on that. So it's been an absolute banger of a trade right there coming in with Link. So absolutely fantastic. I have the Tiger says, pure education is the best investment you can ever make in your life. It changes everything. I love that. That's right. That's right. It's exactly what we do, guys. But I just want you guys to be aware, okay? I'm not going to promise you the world. I'm going to promise you that if you are serious, like truly serious, not just words, really serious about learning to trade properly, and you put in forth the effort and the dedication, the focus that you need to do for it, you will learn more with us than you will learn anywhere else. I mean, by a long shot. And not just learn the separate things, but how they all work together so that you can forecast, okay? But unfortunately, I don't know you. I don't know what your work ethic is. I don't know if you're really serious about it. So a lot of people say, they're really serious about a thing, and then, they kind of just goof off on it, right? And if that's you, maybe it's not your time. Maybe you're not ready right now. But it doesn't matter who you go to. Nobody will ever be able to help you. You have to help yourself. All I can do is tell you, listen, this is how things work. This is why. And I will explain it multiple times in multiple different ways, right? But it's actually up to you to be open and coachable. And so many people aren't, unfortunately. So you got to make sure you are before you jump in with something like us or anybody else out there. Because otherwise you'll get a bad taste in your mouth. You'll be like, oh, everything's a scam and whatever. And really, it's just that you didn't put forth the effort you needed to do. You guys know I'm very big. Those of you that follow me know I'm very big about personal responsibility, right? I just believe that, in life, that's the only way there's to go. Everybody today wants to complain. Everybody wants to whine. Everybody wants to blame everybody else. Nobody actually wants to take responsibility. And that's why people are where they are. That's why people aren't happy, right? So if you guys are ready to do it, I'm ready to take you and get you going and show you how it's done. There is no, hey, listen, you have to stay with us however long. You stay in until you learn what you want to learn. Stay with us after. We got so many people stay with us just because they like the community and they're always still learning more. But, if you get in there and 4 months later, you think you've got it figured out and you've got enough, definitely, I'm not going to sit there and force you to stay. We're here for you. That's what we do, guys. Okay. Pimo, what's up? Let me see here. Elijah, Love the prediction on Solomon. That was such a great one. Elijah, I don't know if you caught it when I actually made the prediction there, when I did the forecast there on the Wendy O show. But, man, I remember looking after that show and reading the comments, and it was so much hate. Oh, my gosh. You got to have a thick skin to be on social media here, right? But, man, people were just dragging me across the coals for that. But it's turned out well. And you know, those that listen were able to get in really well, you know, a bit longer than Link. We had a good bit of accumulation here because we had that, you know, Link was doing, you'll see it here in a minute. We'll show you the charts. Link had the long accumulation that we just broke out of. Sol had the dip, that capitulation, and then rally up. And then it had the accumulation this year to finish it off. And then now it's, of course, rallied out, just keeps on pushing, right? So, yeah, it's been a great one. Brian, what's up, buddy? Dan Physics is here. Says facts. Cryptophasia, what's up? My buddy, Diego Chile, what's up, man? All right, guys, listen, you ready to do some charts? I said, are you ready to do some charts? What's going on, Hangry Patrick? I see you there too, buddy. Still one of my favorite names. All right, guys. Here we go. So let's see here. Let me see. Oh, hey, Matt Strazer says, take personal accountability for your life and financial future. Enjoying TWC and get disciplined about it or stay frustrated and poor. I love it, man. I love it. Matt's with us, of course. Mark Chenard, what's up, buddy? You forgot to check the chat. Check in, man. Hey, listen, guys. Here is what Bitcoin's doing, right? Here's what Bitcoin's doing. And this, if you've been following me, this is the same chart I keep bringing up and I keep adding to, you know, I giving you, you know, writing in more and more as it continues to play out, but giving you guys this roadmap, right? And so not too many people listened over here. Well, our members listened over here when we were talking about this potentially being the start of accumulation. This is June of last year. And then, of course, we noted the potential drop we were going to have here because we were having lower highs and lower lows. And we did get what turned out to be a terminal shakeout here. Does its range. We rally back up. And I showed you guys this multiple ways. I showed you the dragon pattern and some other things. Did exactly what we said it would do. Rallied strong up through all this. Got a pull back here. The only thing that I wasn't able to forecast was this double back up the edge of the creek here. In Wyckoff terms, the creek is the previous resistance, the supply. And so you have the jump across the creek, which are these big candle spreads, big spike of volume. And then sometimes, and often enough, you'll get what we call a backup to the edge of the creek, which is just basically a retest of previous resistance as support. So you got the range here and this little bit outside of it. And that's what we did. We tested. And usually it's only one test. You know, two tests is not what usually happens, but we got it here. So we had like 7 months of sideways here, guys. And then boom, the big pop. Everybody telling you it had to come on down. Everybody giving you every reason in the world why this wasn't accumulation, why accumulation still has to come. But myself, Wyckoff Analytics, and what's the other one? The guy that owns the SMI Wyckoff Institute now, Richard Wyckoff's original company. Oh, I feel so bad I can't remember his name at the moment. Butterfield Todd. So, you know, Wyckoff Analytics and Todd Butterfield are the bigger Wyckoff people in the space. And, you know, and they and myself all agreed that, you know, the accumulations happen as it's drawn on here. It was the new people who really kind of argued about it. But at this point here, almost at 40,000, you know, if you don't believe that's accumulation, there's nothing that anybody can do to force you to believe it, right? A lot of people say, hey, listen, convince me. You know, not just in trading, but in anything in life. The problem is in life, nobody can convince you of anything. You have to convince yourself, which in order to convince yourself, you have to be open to listening, to truly listening. And most people aren't. It's just part of being human and you know, and things that go on. But, you know, again, it's that whole taking responsibility thing, right? And so you have to do that. You have to do that. Otherwise, you won't be able to change your, if you're not open to listening, what you're basically saying is what some people actually write out in the world, which is, well, this is my opinion and you're not going to change it. Well, okay, if I'm not going to try, I'm not even going to try, right? I'm not even going to give you any extra information. Why would I? It's a waste of my breath, right? So you got to be open, guys. You got to be willing to listen. I'm telling you, I've been doing this so long, and yet I still try to find something to learn every day. I honestly believe, not just in trading, but in life, if you're not constantly learning, if you think you know enough or you think you know it all, you're going to start falling behind at that point. You have to continue to push yourself. You have to continue to learn more. So to that end, still today, I still buy different courses and things that people put out there. If it looks like it's going to show me something different than what I already, understand about markets, because I want to continue to get better. I want to continue to grow my knowledge of trading, right? I'll never be satisfied and think I know it all, because that just, you're just setting yourself up. It's like saying, listen, you can say whatever you're going to say, but I'm not going to change my mind. And again, that's how you lose in life, right? But we want to be winners, right? We want to be winners. Who wants to be a winner? I do. So you gotta do it, right? Genghis Khan, what's up? You said you're in Todd's group? Yeah, I like Todd. He's all right guy. Let me see here. Okay. So yeah, so here we are now, right? And so we've got basically 6 or 7 months of sideways here, right? That's a long time. We should get a strong breakout. We did. Now, usually we expect the pullback, right? Again, this is what we have here. We have the breakout and the pullback, the back of the edge of the creek, right? It doesn't always happen that way, though. Sometimes you get this, and you get what appears to be reaccumulation as it continues to rise. So you're getting this slight overlap, this slight higher highs and lower highs. I'm sorry, higher highs and higher lows. Oh, you get confused when I say that. Kind of doing this channel thing until you get the breakout, right? And so with this happening here, this increases the odds that we will continue to push higher, okay? Because of this structure here. It looks like we're accumulating over here between basically 33.5 and 36.5. The $3,000 range there, a lot of overlap for a couple of weeks there as we, are accumulating. You see how this volume kind of dropping off in this range here as we rally up there, and then boom, we get the push out, the pull back to the range here, and then we're pushing out, trying to push out again here. So I think we do continue up higher, right? Sad says, I was in Todd's group temporarily, and then my group is so much better, so much. I appreciate that. Like I said, I like Todd. I've never obviously been in, his group there. I just know that he has a certain offering as well. But when it comes to Wyckoff, again, the people you should be watching, guys, if you don't know, when it comes to Wyckoff Analytics, that's Roman and them over there. And then Todd Butterfield, his Wyckoff Institute is the other one you should watch. They both have a little bit different approach to it. And then, of course, watch me, right? But when you watch other people out there, you kind of, if you guys have seen this last year, again, the idea of arguing that this wasn't accumulation as it drew up here, kind of shows you that most people are getting into this are very short term. They just kind of saw something online. They don't have any real education in it. Now, I'm sure there's other ones out there, but I'm just saying, I'm telling you right now, Todd, Wyckoff Analytics, and myself, definitely who you should be watching when it comes to Wyckoff, okay? Let me see here. Zobia Dollars, what's up, buddy? Good to see you here. Let me see here. So, yeah, so again, we've got the breakout going here. We're right up here on the daily S1 pivot, okay? Now, let me talk to you guys about something here. Those of you that have followed me, you may know that I traded just pivots for a few years, right? To get a full understanding. I'm telling you guys, if you you guys need to believe what I'm telling you. I have spent, the last 30 years buying just about every course out there, learning just about every way to trade out there to learn more about it, right? To learn, exactly how does all this work. So I did pivots for a few years, okay? Back about, it was about 2010, right around there, 2009, 2011, right around there. So just over a decade ago, it's all I traded. And so one thing we learned, right? When you're coming in sideways between the pivot and the R1, okay, there's a couple of things that might happen here. One is you drop down through the pivot, in which case you want to see, does it get a reaction at the S1 and break back out higher? Okay. The other one is it breaks down through the pivot. It might get a bounce to the S1. It gets reject the pivot and continues lower and runs the S pivots. Okay, the support pivots. But if it's going to be, and if it drops the S1 and breaks back out, then that's bullish. If we rally up to the R1 and pull back to the pivot and then break out higher again, pull bullish. And we can usually look around the R3 pivot for the rally. If, however, you get something like this, you rally the R1 or up halfway or up to the R2, and it pulls back just to this area right here, or up over here, right? It doesn't drop through this support area to test the pivot. If it goes out here and comes back, or up here and comes back and goes up, most of the time, there's no guarantee. It's everything all the time in trading. But most of the time, it's going to rally at least to the R4, if not the R5 pivot. Okay? So I'm watching this right now. I'm interested in what's going on here. Do we get a rejection, come back here, file support, and then pop back up again? Because if we do, I'm looking up here. And that R4 pivot on the daily is 52,000. You guys that have been watching me, what is my target area? What is my target area? You know? Elijah, hit the on the corner of your YouTube player. If that, yeah, you're on YouTube. On your YouTube player, click on that. It usually defaults to a real low. What you call it? Like 740 or something, right? Yeah, hit the gear icon, and then put that up. I always stream at high definition, 1080. So yeah, but I'll zoom in a bit here so you can see this too. The rest of you as well. If it looks blurry, that's YouTube's thing. You have to go in there and set that to 1080 if you want to get that in on 1080, okay? Oh, it is on HD? I don't know why it's blurry then. It shouldn't be. It should be really clear. Yes, Mark, 52,000 has been my target for most of this year. So that, you know, this month, the daily R4 pivot gets you up there around 52,000. So not saying it has to hit there, but I do like that kind of aligns with what I've been looking at. Now, here's the other thing, guys. Zoom out to the weekly, right? What I talked about before, so the weekly pivots here, they get, they're the yearly pivots, right? They show up on the weekly and the monthly, and they change every year. January 1st of every year, they change. December of last year, I said, listen, we want to watch where the new ones show up here, but my initial target is going to be that R1 pivot on the weekly. We hit that. We hit that. So those of you that were here just under a year ago, you might remember me talking about that. That's what we got. Again, I expected it to be a 1, a pullback, and then a rally up. We got 2. It is what it is. But overall, hitting those targets we were already looking at. And this is the stuff that you can learn, guys, you know, with our group coaching. These kind of things that I talk about, right? So let me see here. You can see my pores. Mark's a mess. Mark's one of my favorite Canadians, my favorite Canadians from Canada. Anyway, so yeah, so we've got this nice, clean structure here. By the way, here's the other thing on this. Let me see. Is it on? Do I have it on these? Well, let me do this. Let me change it to this one. I'm going to show you this one real quick. Let's get over here. All right, this is another thing I kind of posted. By the way, these are the this is the weekly BLX here. Bitcoin Liquid Index, right? So it's basically the one that goes all the way back to 2010. The red line here is the 200 MA on the weekly. The blue line is the 100. Wait, let me see here. Oh, I'm sorry. The red one is the 200 daily MA moving average or simple moving average, and then the blue one is the weekly 200. Okay. So that's what we got there. We got them kind of together here as we rally back up. But what I want to show you guys is this right here, something I posted on X. I saw that stuff there. Let me do this. Let me get rid of this other stuff here so I can draw this on here for you. All right, there we go. So the really good thing I like about this rally off the low here, come on. Let me just kind of draw this in here, is that we've got this great looking channel, right? So we've got this great looking channel kind of coming off the lows here. We found this support back over here. If you guys watch Fibbo, you know Fibbo's on here with me every other week. He'll be on next week, Friday. He and I were talking about this little area right here, this support. and how this held here, which has been great. It held not only the diagonal support, but the pivot support on the weekly right there. And look at these weekly candles. Boom, boom. Big candles, breakout, right? A little bit smaller candles. But look at what we're doing, guys. Pay attention to what's going on here. We are sitting right here, right? So we broke out. Remember that little accumulation I showed you for 2 weeks? And I said it looks like accumulation on the rise there. Look at what we're doing. It's fine. It found support on the EQ of the ascending channel. It rallied into the next resistance, which was the R1 pivot here. Usually when you see this type of thing happen where you have these big candles that break out, large volume expansion, large candles that break out through the EQ, and then it finds support on the EQ, usually you target the top of the channel. This is price action, okay? Now, this top of the channel next week is going to be closer to around 44,300 or 400 or so. The next week after, you know, it'll be closer to around 45,000. Okay? Now, we know that seasonally, Bitcoin, you know, we have October, everybody talks about, right? But November is usually Bitcoin's best month. In the entire life of Bitcoin, that's been the best month. So we had a great month last month. What if we have an even better month this month, right? And so we look for this coming up here. Let's jump this out to the monthly now. We got a lot of work to do to get us better than last month, right? But it's possible. It's possible here, right? We can get us potentially $10,000 on this, which would be better than the, I don't know, was it about $7,000, $7,500 that we had last month? But look at the months overall, guys. Look at this month right here. This month right here on the BLX opened at 16,500 basically, closed at 23,000, right? So you're talking about, was that 35, almost 24,000. So basically 3,500. It's about $7,500 candle here. And then we were sideways. And then boom, another big candle, right? And then sideways, and then boom, another big candle here. This one opening at 26,965 and closing at 34,660. So that's another, as far as the candle spread goes, right? That's 3,000 and what I say? 34. So $7,600 there. I mean, so, you know, this month, if we were to attack the top of the channel here this month, that would give us a return of about, yeah, just about $10,500, $11,000 up there. Making it, again, keeping with historical moves, the best month for Bitcoin, right? So, when I look at this, right, this is what we're looking for. If we can get a nice impulsive breakout above this R1 pivot, I'm looking up here. By the way, you'll notice this month, right? Look where it takes us this month. If we get the top of that range there, look at that. It takes us right here into resistance where we would expect. Gets us those mid-40s there, right? So when I look at this, the idea that we're going to come back to this range here for a few months, as long as we continue to rally up from where we are right here, I don't think we get that. That's what I was talking about when I've said previously that that, you know, those waiting for the return back to this large range may not actually get it because it was such a large range. We already had a large range here and a big breakout, and we came and retested that with another large accumulation range. Odds are we kind of move up, right? Historically, Bitcoin kind of does this thing. If you guys don't know, if you haven't looked at the charts in the past, you'll often get this kind of rally here. You'll get this accumulation as it rises and then a continuation up from there. I don't know. Let me see if I can find one here real quick. Like right here. See this right here? That's what it does here, right? And you know, so, you know, this is the thing it does historically when you're really kind of moving into that, right? This one had a little bit more of a pullback here, but generally the same idea, right? Higher highs and lows coming up through here. Let's see here. You used to have a chart where all these were marked out. You got it kind of here. This one's a little bit, again, a little bit more of a pullback, but same idea kind of going on here. You had it right here as well. Right here. But But yeah, you know, we kind of get into these things where it just does this rally, this accumulation on that rally, and then it just keeps going up, and then it doesn't get the pullback to it. And so that often happens because people miss the breakout, and so they're waiting for it to pull back. But then when it breaks out higher again after, you know, accumulating locally there, they get nervous and they jump in, which just, again, accelerates price upward, right? So I think there's a possibility that we may see that happen here. But if we can clear this kind of area, I mean, guys, a move up there to the end, right? You up there, you get a pullback, rally up higher. Do I expect a new all-time high before the halving next April? No. You know, again, I continue to talk about it. Historically, Bitcoin retraces about from the bear market low. So for that bear market there, usually it retraces the 70.5 to 78.6. And so that aligns right there with the, you know, 53,000, 57,500. And then it pulls back into the halving, and then it breaks out, right? So oftentimes that's what we get. If we'll look here, just about up there. See, okay, so we can say 65 even here. So if you want to look at 65 here, that'll get you 50,000, right? But that, you know, if you go back here through historically here and go back through it, you know, that's what we're usually doing on this. I used to have a chart I've shown a few times, put it on X, that kind of marked this as well and showed you the cloud and everything. Right here, again, 61.8 right there. So we'll say 61.8, close to that, right? You're still looking up here around 50,000. Minimally, usually where we hit before we get the pullback into happening. So, you know, everybody's going to give you reasons in why, you know, price can't go up. They've done that for the last year, right? Not just with Bitcoin and other cryptos, but also with gold, with silver, with especially with stock indexes, right? And you know what? Maybe we get the recession. Maybe we do. But at this rate, until it happens, if you're sitting on the sidelines because some Yahoo's telling you, listen, we're going to get a recession, I've been telling you for a year plus, you're just losing money, right? You're just losing money. New Type Trader, what's up, man? He says, what are your experiences with the MACD? I'm seeing bear divs on the 6-hour daily and weekly. Am I interpreting correctly? Love your work, man. Hey, man, I appreciate that. Well, let me check. I'll throw it on here real quick, okay? Like any other indicator, you know, you just got to learn how to work with it over time, right? But the one thing you have to understand is, especially on the larger time frames, you know, where things can stay overbought or oversold for much longer periods of time, you know, those bear divs can form but not confirm, right? And so price continues to move up, RSI continues to move up, and so RSI then potentially a lot of times ends up invalidating the bear div, right? Before it ever actually confirms. So let's see, you said, what time frames were you looking at here? Excuse me, you said 6-hour daily, weekly. Okay. Here's weekly. So if I'm looking at weekly, what I'm looking at is this right here, okay? You see this swing high and then this lower swing high here, and you have this swing high and this higher swing high. There was your bear div, and this was your result. Now we have here to here. We don't want to just go from here to here. We don't want to skip this parting here, right? See, we had the bear div as well here on the weekly RSI, right? Basically, you've got higher highs in price. You're getting lower highs here in the oscillator. There's your bear div. Here's your move down. What happened down here? We got hidden bullish divergence right here, right? Up. And so now, you know, again, here on the RSI, for instance, we're going high to low, high to low. We're not comparing this to this over here because we've already done this bear div right here. Same thing with this. The bear div was here to here. There was your result, was the big move down, right? I mean, this was a $6,000 move down. $7,000 almost 32,000 down to 25,000. $7,000 move on 32,000, right? 7, 14, 21, 28, 35, you know, it's almost what, a 17% move, 18% move down. So a lot of times people say, you know, out there, they get really lazy with indicators and things. You guys have to understand, most of the people that you find in social media that are doing trading are very lazy. they haven't really done a lot of real education, and they're very lazy with the way they draw their patterns. They're very lazy with the way they use indicators, okay? And so then if you watch them, you learn to go, oh, well, this is bearish divergence here or something like that, right? And you don't actually pay attention to the preciseness, okay? And so you learn wrong. And I hate that because, again, I'm the guy that's been doing this for, decades here. And I think that, man, it's a great way to live and learn, but there's so much bad information out there for you guys. So I want you really to be careful with that, okay? So yeah, you're definitely welcome. Yeah. So, again, we got that bearish divergence on the pull down here, right? And then we had the hidden bullish divergence as well right here, right? On the MACD, we got these lower lows and we have these slightly higher lows here. So same as what we had on the RSI, we have on the MACD. And so we got the rally up now. So yeah, I wouldn't say there's a bearish divergence on that right now. We're on this whole new rally coming up off that. Looking good too, by the way, here. Nice clean breakout here on this big candle. You got that bullish cross then on that MACD coming up. You had we changed from the red to the green histogram there. A lot of good movement in there. What sort of pullback into the halving? Well, so just generally speaking, if we get a 61.8, that's usually a wave 1, right? So a wave 2, we would look to pull back. Usually around 50% or so. So if we only get the 48.5, we could potentially be looking at a retest of this larger range here. If we're going up toward 70.5 though, well, now we're looking at a retest of this multi-week sideways area here. If it continues to go up, it doesn't have to stop there. If it continues to go up, we get a 78.6 around 57.5. We'll be looking generally initially at 36.5 right here toward the R1 pivot. So yeah, it's going to be dependent on exactly where we get, but I would look for a minimum of a 50% pullback toward that swing low. That would be the pullback that I would look for. A lot of people are going to see out there, they look at 2019, go, oh God, we got to do this over here. Have you guys seen that online? Have you seen on social media a lot? Where people grab all this and they go, oh yeah, look. So we've got, oh God, I got to find out where these stupid things, I don't ever use these. Where is it? Oh my gosh, the candle copy. Here we go, bars pattern, there we go. Have you guys seen this on your feeds yet? I mean, you should have, right? And they go here and they go, oh, like right here, I think is where they put it recently, right? And they go, oh yeah, we have to do that. Only one time has this happened, guys. Didn't happen here. Didn't happen here. The only time it happened was 2019. Yet the Yahoos online with the big followings are going to, not all of them obviously, but they're going to do this. And they're going to say, oh man, we're going to do this. That doesn't make sense. That isn't how trading works, guys. Don't look at something that just happens once. If you're insistent on getting a repeat of previous things, look for something that's similar time and time again. History does not repeat, but it often rhymes, right? It doesn't. It's not exact copy, but it often similar. This was one of those things that just happens. This is not what usually happens. You don't normally get this right here, this 90% pullback on the wave 2. Okay? It isn't what you normally get. So don't follow any of that nonsense, okay? Pullback into the halving, would look at probably about a 50% pullback from the swing high when we get there. Generally, just general speaking, how I would look at it for there, okay? Let me see here. Rect Capital keeps comparing current PA with COVID lows, so I stopped following them. Yeah, you can't do that. You can't do that, guys. There's just a lot of really bad, unfortunate stuff out there. And it's gonna get you losing a lot of money because it's gonna sound very emotional. They're very emotional, and it's gonna make sense if you don't understand what's really going on. If you're still learning, if you're just kind of getting in there, right? And that's the danger. That's the danger. You guys have so much information available to you guys today, right? The problem is most of that information you're going to find are half truths, if not outright lies. And it's not because people are trying to screw you over or because people are trying to lie to you. It's because they don't really know what they're doing. And this is the danger. This is the danger in today. So like when I started learning was back in 95. So before AOL even had the, you know, the unlimited dial-up for whatever it was, $21 or $25 or whatever it was back then, 33.6 baud. Oh, that sound still today. Anyway, you know, so I didn't get to learn in this environment that y'all get where there's just all this information at your fingertips. So you guys need to be really careful out there who you're watching and why, because a lot of it's going to be misinformation. And again, not because they're purposely trying to screw you over, but just because they don't really know what they're talking about. They're trying to learn along the way. They're better marketers, so they're better influencers than they are traders. You see what I'm saying? Mark, you said you were 4 and dare I say killing it. Oh, man. So anyway, yeah. So, I mean, you know, overall, structurally, we look good, right? If you're looking at market structure, guys, if you're a market structure person, you have high, low, lower, high, lower, low, lower, high, lower, low, right? You broke out above this 25,000 area here. You broke that bearish market structure. You are now in bullish market structure, okay? High, low, higher high, higher low, higher high, higher low, higher high. Still, we are in bullish market structure. Almost 150% rally over almost a year. And people still want to say bear market, okay? So this is where I am. I think we're still doing good. I think we've still got to go up. I still think we break out higher and we kind of continue up. Worst case scenario, we pull back, and maybe we get a pullback to 30. But this range here, this is reaccumulation. This should hold. It should be just a pullback there and further up. Because in the grand scheme of things, we've only rallied 38.2. We haven't even rallied 50%. That's around 42,000. Yeah, the bear market. So we should, for all intents and purposes, continue rallying overall. There are going to be pullbacks along the way. Nothing is straight up. But here we are. We're in this great channel. That EQ is a thing of beauty right there. I love the way it sits there, works as support and resistance, especially most recently here. Go up, okay? What about Ethereum? Guys, this is Ethereum. Now, recently, everybody was very, very bearish about Ethereum, right? Right, these lows here. And they were going, oh my God, Bitcoin's continued up and Ethereum has. Well, Ethereum made its low in June, right? Remember, that's where Bitcoin had the first low, and then it broke down in November here, right? It made its terminal shakeout, its bear market low, right? So what does this mean? This is accumulation. Look at this. You have consolidation up toward resistance. You have volume decreasing the entire way through. Guys, this is accumulation right here. This is, how long of accumulation is this? This is, get my thing down here. This is the monthly, by the way, here, okay? 518 days of sideways, guys. Almost 2 years of sideways. Yeah, a year and a half, a year and 3/4, right? Look at this, guys. This is all accumulation. On Bitcoin, this was the actual accumulation range here, right? This area right here. This accumulation was only about 266 days, okay? And look at the big moves we've gotten out of it since, right? Ethereum has been in accumulation for 518 days, over twice as long, okay? So this breakout should be a strong breakout. By the way, I've got this as a 1, 2, 1, 2. Okay, that's my count right now. So this is 3 of 3. That gives us a minimum target up there, 4,700, which just so happens to be right there toward the all-time high. But this would be 1, 2, 3 here. So this 3 would be 1, 2, 3 up here. So it's 3 of 3. Okay. Big candle spread. Big volume should come out. You can note off the swing low here, Look at how your candle spreads are getting larger and larger on here. Look at this. Little one, bigger one, right? Look at your volume expansion, the first two. You had your lowest volume at the pullback. There's no selling going on. There's no selling going on there. Look, no volume. Volume kicks in on the next as it starts breaking upward. We're only 10 days into this month, so we still got another 20 days, right? And we're almost up halfway in the volume here, right? Last month we had 2.691 million. Right now, 10 days in, we currently have 1.153. Okay? So a little bit less than half the volume at only a third of the way into the month already. The expectation should be higher volume here, should be a larger candle spread than what we had here as we break out and head up. That's what we're doing. So if you want to look at this as Wyckoff, this is accumulation here. If you want to look at it as a 1, 2, 1, 2. Third wave. Your third wave in Elliott wave is your biggest, strongest wave. That's the one where people go, oh, crap, it's leaving without me, right? That's the one where people get it. That's why the third wave is usually going to be your largest and your most volume. And it usually happens at the point of significant areas of resistance, that breakout. Okay? So Ethereum, as good as Bitcoin is doing, Ethereum looks like it's ready to start outpacing Bitcoin. And it makes sense, right? If you think that Bitcoin's going to pull back, it's going to rally a bit higher, and then it's going to pull back into the halvening, right? Well, during that time, you should see Ethereum continuing, right? So as Bitcoin's pulling back, you should see Ethereum continuing to rally overall. These are the big term macro picture, right? And so, yeah, I think Ethereum's going to put some good money in here. Makes sense, right? Let me see here. No, three is going to be a 4,700 target. Don't forget, guys, I'm using trend-based fib extensions based on log scale. Fibs based on log scale. I for the longest time I wouldn't do that. If you don't do it, you can see it's a lot lower here, right? That's what Andrew was looking at there, 3,200. But I've been using them for a year now, back and forth, and I'm just solely on them now. And the targets work out. The targets seem to work out. So I'm sticking with it. But yeah, so is Ethereum going to outpace Bitcoin? I think over the next year, I think it's got a very, very good chance of doing so. And that would be in line with every previous bull market, right? Ethereum is still an altcoin. It's the second largest coin out behind Bitcoin, but it's still an altcoin, right? So it kind of moves a bit with Bitcoin, but a bit with the rest of the altcoins as well. The smaller the micro, the smaller the market cap, the more they move, the higher beta they are, the more they move opposite of Bitcoin, right? But generally speaking, if Bitcoin's going up for the most part, Ethereum tends to also kind of follow with it, right? That's what the large caps do. They kind of move together more or less, right? So yeah, so I wouldn't sleep on Ethereum. I told everybody not to sleep on it over here again when we were down here at around 1530 and we were holding, that support on that line coming up here. And, here we are now at 2,100 right now. So what is that? Going on to 40% or so, about 40% rally off that. It's been a good rally so far. Now, in terms of Ethereum, Bitcoin, again, guys, we've been talking about this low for months now. We looked at some possibilities on the way, but ultimately looking at, if they weren't going to hold, we were looking at this low right here, this EQ of this green structure. And we got good. We got good on this. Was last week. We got the rally up off it this week. Another good rally coming off. You can see that the weekly Stochh RSI and RSI are just getting started. They're just breaking out. Got a lot of room to go. We want to see a breakout above that descending resistance, which should get us a breakout above wave 4 here at 0.06467868. If we can do that, that's the first real clue that wave 2 is probably done. Breaking out above wave B at 0.073625240. That's going to add confidence to the count. We do that, you should be looking at wave 3 up here at around 0.12888. All right, so that's the way it is. With the Elliott wave, you kind of get in, then you go, okay, well, here's the first level. The first level is going to be the wave 4. You really need to break out above the wave B or the wave X, whatever that midpoint happens to be, right? In that three wave, the second wave is, which is the up wave, right? Your B wave, like I said, or your X wave. That's the one that once you go through that, it's all but guaranteed. Again, there are absolutely no guarantees in trading other than you will lose money from time to time. And the newer you are, the more money you'll lose more often, okay? Other than that, there are no guarantees in trading. But we look and go, okay, my first clue is going to be that breakout above wave 4 of C. I want to break out above wave B. If I can do that, then that locks this in as a 3-wave decline. If I'm correct in my account, then we're going up. Now, other 3-wave declines could be flats. You can get 3 waves down, 3 waves back up, 90%, at least 90% rally of wave A. All right. So this would be 3 waves down for wave A, 3 waves up for wave B, and then 5 waves back down for wave C, right? But we're all the way back down here, almost invalidation level. The last thing I'm thinking is that's going to be a flat, okay? It is wave 4. Could it be a triangle? You could have A, B, C, get a D, and an E, a consolidation. But this looks a lot like 1, 2, 3, 4, 5 waves. So unless we actually see 3 waves up with a lower high, followed by 3 waves down with a higher low, A, B, C, D, E, right? I'm going to keep leaning toward this because this looks so clearly like 5 waves up. Okay. So there's where we get to, okay? So again, Ethereum against Bitcoin looking good. That would kind of rally in there with kind of align with my idea that over the next 6 months, 12 months, Ethereum is going to outpace Bitcoin overall, right? Is there any concern? What's going on, Troy? Is there any concern that blockchain stocks haven't moved up with Bitcoin on this latest move, or is it common for them to lag initially? So remember, guys, blockchain stocks or blockchain adjacent stocks are still stocks, right? So they're not just going to move exactly with Bitcoin. You need to move out to the larger structure, right? And you'll see some differences in the way they play out, right? I've got RIOT here. I'll pull up RIOT in a minute. Okay, RIOT's one of them. But you can also look at MicroStrategy, which you would argue is a Bitcoin stock these days, right? And it's done extremely well. So overall, I think the thing to remember about Bitcoin stocks or Bitcoin adjacent stocks is that they are still stocks, okay? They're not direct, pure Bitcoin plays. And because of that, they're going to have effects, like what's going on with the company itself, what's going on with, what people are thinking about stocks in general, all those kind of things are still going to kind of come in there as well. But what you're looking at overall is, upward movement, right? You're looking for an upward trajectory. If you have it with Bitcoin, you're looking for that with those stocks as well. Okay. Mark, our accountant here, also says, and he is, believe it or not, guys, he is an accountant. He says they need certain accounting periods to be able to report the gains, losses of their assets, which also affects the stock price. They need to release quarterly financial statements or something simpler. Yeah. Right. So again, you just want to look at that, right? Johnny says, do you say something previous? I don't see you say anything previous. This, for example, small caps getting killed right now in the overall market. Yeah. What's going on, Edward? Always good to see you, bud. You're talking about Johnny's talking about for Bitcoin mining stocks. Yeah. And again, we know that stocks in general tend to move a certain way, right? Again, well, it's kind of like crypto does the same thing, right? You have your large caps, then your mid caps, then your slow caps, then your micro caps, right? You have these cycles that they go through. Stocks, same way. Yeah. Let me see here. So that's what we're looking at with Ethereum, Bitcoin here, right? So we got Bitcoin, we got Ethereum, Bitcoin. DXY here real quick. Let me see here. So overall, again, big picture. You guys always have these big pictures from me, right? Monthly. There we go. Big picture for the monthly, right? I've posted this on X multiple times. The general idea is this looks like a flat correction here. If it is, wave B could be done, or we could have one more push higher here toward 125.705. For right now, we hit my wave 2 target at the EQ of this ascending ascending channel here. It's also the 50% retracement. We're looking at a flat here. So ABC up, ABC down, and 5 waves up into this area. 50% retracement of wave 1. So it's a solid wave 2 area. So now we just need to see, okay, are we going to get a breakdown? If we get the breakdown, that would give us 1, 2, and wave 3 would have an expected target of about 75.33. 5 complete C down here at around 70, right? Which is just basically right back around over here where we were in April of 08. No big deal, right? No big deal. But again, if we do continue to rally up through here, as we get closer towards the top, I'm going to look and go, okay, well, maybe instead of this being 5 like this, maybe it's 1, 2, 3, 4, and 5 still up. So based on the height here of this, what would be wave 4, we'd have that 125.705 target. And that's really what we're saying here. So overall, that's kind of where we're at with that on the monthly, right? Looking here, this is the weekly here. This is just another way to look at it. This was the range play here, okay? We had the deviation to the south here. This dip down below, rally back up. We're pulled back. Now, what is this right here? This happens to be this downward channel, right? Now you're going, okay, why do we have a lot more information on this one than we do on the other one? Because this is actually the DXY. The other one is the DXY futures, okay, on the ICE exchange. Matt, what's up, buddy? Thank you so much, man. I appreciate it. So we have this descending channel here, right? And so we're kind of getting caught in this rejection here, and then we popped out above it. And so what we're looking at, you notice that monthly, weekly, yearly pivot right here, right? Finding support right at the top of that range. So that's what that is right there. Let me zoom back in here a minute. And so again, the idea potentially with this count is we got 1, 2, 3, 4, 5. So we have 1 here, and then we have ABC up, ABC down, and then 5 up here to give us this expanded flat for wave 2. That's what we're kind of looking at. So for here, you can see we've kind of just currently rallied right up to this previous resistance area, resistance support area here. We can kind of pull this over. Support, resistance, resistance here, support here, resistance here. Big candle down last week, right? Big candle down last week. I mean, if I was, if I'm trading this price action wise, we had the rejection, and then I look for the follow-up, which is this, gives us that other rejection, and then I look for the breakdown below here, stop loss above the swing high. Now, obviously, that's a big stop loss here because this is the weekly, right? But you can do it on any time frame. But again, right here, right, you have the rejection, the pullback, the rally, second rejection, and then you're looking for that breakdown here to kind of come down, right? So, overall, classic. If I'm just looking at price action here, this looks significantly like it's a top. Like we would have, like it's a rejection area here that's going to come on down. So, even if you're not into that kind of thing, that's still there. Brian, did I cover Doge? No, not yet, but I can probably bring that up. Let me see here. So, yeah, so dollar still looking for it to continue down here. Let me see the weekly here. Let's jump in a little bit closer. You see the weekly, we've got a lot of room for it to fall here on the Stochh RSI down here. It's the bottom indicator. And up here at the RSI as well. 3-day, we pop it in there. Again, great rejection up here, coming down further. You notice that we found support right in this demand block right here, right? So, I mean, it makes sense. Fresh demand there, hits it, boom, pops up. Now we're just up here where all this resistance is. We should overall look for this to kind of get rejected and head on down lower from that area, right? Yeah, and so here we are. Looks like we want to get rejected here. We've just been doing some sideways here on the RSI. Looks like it still wants to come down further, reset. Stochh RSI, we reset and oversold, bounced out, reset again, bounced up, didn't hit oversold, overbought, hit oversold again. And, it looks, it's not clean. It's not a clean movement like you like to see. So usually when you're doing this, it suggests that price is continuing the trend that it's in. In this case, the trend is clearly down, right? High, low, lower high, lower low, potentially a lower high here. So overall, I think we'll continue to see the dollar or the DXY here continue to drop on down, right? Kimasabi says the Ethereum accumulation structure appears as a leading diagonal dim. So yeah, I mean, possibly, right? That's what a lot of people are saying, 1, 2, 3, 4, 5. It's possible. It's possible. I don't default to diagonals. Diagonals, because they are the exception and not the rule, I default to a 1, 2, 1, 2, and then let it show me that it's a leading diagonal or an ending diagonal if it was an ending diagonal. Does that make sense? So when you're doing Elliott wave, you should always default to the rule, what generally happens, and allow what's going on. Allow the chart to kind of show you that maybe it's the exception, right? So yeah, could potentially be 1, 2, 3, 4, 5 here as a leading diagonal. But for now, until it does that, right, I'm going to continue to look at it, right now as a 1, 2, 1, 2, because that's more normally what it is, right? So yeah, but definitely could be, Kimasabi. Sure, could definitely be. Randall Dance, what's up, my man? He says, hit the like button. Yeah, guys, you know what? Subscribe to the channel. Follow me wherever you're catching me at. I'm simulcasting multiple social media platforms here. But follow me, subscribe, comment. Even if you don't agree with me, all I ask is that you're respectful. If you've been following for any amount of time, I don't have any problem with disagreements at all. I'll explain to you why I think things are the way they are using my experience and what I know. And if you come up with something different, maybe I go, okay, well, I don't think it's that because of this. Or maybe you'll come with something different. I'll go, man, I didn't see that. Or it didn't occur to me that maybe that's what's going on. So I'm all about discussions, guys. I'm all about discussions. Just don't be a jerk. If you're a jerk, I'll ignore you. Sometimes I'll bring you up here and blast you publicly because, hey, you're asking for it, right? I don't prefer to do that, though. I just prefer people to be cool and talk, because that's what it is, guys. You can't learn unless you're open to hearing, really, truly open to hearing opposing positions, not just in trading, but in life, guys. Sorry, it's my my formal philosophy education coming out. Let me see here. Let me see. So let me kind of catch up. Let's see. So we've got those. So here's RIOT. Here's what I'm looking with RIOT. So RIOT, it looks like we've got 5 waves up. A little bit different structure than Bitcoin, right? Bitcoin looks like you've got a 1, 2, 1, 2, right? RIOT looks like we got 5 up. We've got this pullback. Looks like an ABC for a wave 2. Looks like we've got a leading diagonal, 1, 2, 3, 4, 5. And it looks like we got a pullback for wave 2 here, right around 61.8. You can see it's right there where I was looking for it to get to. So I want to see this thing rally up. That should give us a minimum expected wave 3 target right up here around 15, almost 15.5 up there. But weekly pivot kind of holding as support. We had a slow dip here, rejection, and then boom, came up and now kind of finding some support in that area, looking for that move up. We had a lot of volume coming on this drop, but no follow through yet. This is the daily. Look at the difference. Huge volume dropping off today. Now we've still got a couple of more hours left in the day, but you need to pay attention. If there's no follow through, the first thing that gets your attention is you've got a trend here, right? And at the top of the trend, you've got a large upper wick, large supply body, large volume, and you go, man, that looks like it's a reversal. But it's only one candle. You have to have follow through. If you don't have follow through, no. And you're finding support right now, right around the daily pivot. It's important. We're getting a big wick at the bottom of today's candle, a lot less volume coming in, which means no selling. Selling was here, which makes sense, right? You see this? All this resistance right here, they're selling there. We're right in that same area, right? Makes sense to get that rejection. But that's all it was immediate sell there. The market is not following lower. The market is not following that down. The market looks like it wants to say, nope, nope, I want to go up. Now we're going to watch. It could come down a little bit lower. It could hit like your 70.5 here at $9.50, or even your 78.6 at $9.26. But if we're rallying back up here and probably breaking out above that R1 pivot here, right around 11.25, I think at that point we're most likely heading up there to 15.5 to get that wave 3. But that's, the larger wave 3 here, this 1, 2, 3 has a target up here at 36.80 or so. So yeah, if you're looking at this again, if we're looking at this, we've got these larger targets, right? And we just kind of work the way here. So what we're looking at for this larger one, if this ABC is correct here, then breaking out above wave B at $12.55 is going to add confidence to this wave 3 count up here. So again, the structure is not the exact same as Bitcoin, right? You have the same idea of the accumulation here. You have reaccumulation right here. You rally up into distribution, you come on back down. But this accumulation range is still holding as support. We're getting the rally back up just above it here. That's what you want to see. So again, I think RIOT overall, if it's not done, you'll get potential. It's 2 little targets lower. The only thing that changes anything is if you drop down below wave 2 here at 861. If you drop down below that, that invalidates it. It suggests that wave 2 is probably still in progress. And that might have you looking 78.6 here. It's basically $7. That would be that next target I would look if we broke down below wave 2 here. I would look down there about $7. I get you right here in that high volume node. There's 2 really large, as you can see here, 2 really large high volume nodes. But notice we're getting caught in the low volume node, which is where we should get caught. And now we're trying to push out through that high volume node, which we want to do. So yeah. Did I train Jim of All Trades and Crypto Savvy? I don't know either one of them. I've heard of Crypto Savvy. I don't know Jim of All Trades. So I would say no, unless maybe they picked up things watching the stream. But I don't know them, personally like that. So yeah. So again, looks good for this movement up here. Stop the SPY real quick, and then we'll continue to look at other ones. Man, look at that candle. Look at that weekly candle last week, guys. Remember this right here? This was Friday of that week, of the week of the 23rd of October. Everybody and their grandmother talking about how Monday was going to be a limit down day, how that was the beginning of the crash. It was happening. And what happened? Absolute opposite. Of course, I was telling you guys we were going to rally, right? And so now we've broken out of this descending channel. And once you do that, usually you target the top of the channel up here around 450, 457 or so, 456. So, just based on this, that would generally be where I would be looking for us to rally here. Now, again, nothing is straight up. This is the weekly. There's a lot of room left to go still on here. So we'll see what we can get with that, but definitely not hating it. It's been a great rally off the lows here. Right now, as far as the full structure goes, remember, I've got this as an ABC right here. It's possible this is an A, B here is a triangle, and a C. And then this is A, this is B, and this will be a C. So we get kind of like this triangle going here. That's my current default right here. Is this will be an A, this will be a B, C, D, E, something like this, right? To give us a triangle for this larger structure here. But if we break out above wave B there, that's not what's going to happen, right? If we break out above wave B, that's going to invalidate that. And I guess at that point, we'd look at a 1-2 and then a 1-2. And so, if that's the case, we break out above wave B, we could look at this 556 up here gives us, 1, 2, and then 1, 2, 3. So 3 of 3 up there around 556. Now, I guess it's possible this could be an ABC, and this comes down, and then we can have an ABC up here and break out a bit higher, and we have a running triangle. But, until that plays out, until we get more price action in here, this is right now, as long as wave B holds, the top here holds as resistance, we can look at this as ABC down, A, and then B, and then C up here as B. And then we look at A, B, C coming down for C. And so if we can get that, then we look at, okay, we've probably got a triangle. We'll have 3 waves up to a lower high for D, 3 waves down to a higher low for E, and then we'd rally out for wave 5. Okay? Let me see here. Let me see here. So yeah, so again, my default right now until we break out above wave B is I think this, maybe A, B, working on a triangle here. And the only one that's actually different than that is the NASDAQ. Okay, so the Dow kind of looks the same. SPY, S&P looks the same. But man, if you look at the NASDAQ, let's do this. The NASDAQ is looking completely different. Whoops. I'll just prop on this one here real quick. Oh my gosh. Let's see here. Oh, I hate it when it does this. Trading View, get it together. All right. Let me get this done here so we can see some things. And we'll change these to candles versus bars. All right. So let me get this as the weekly even. Look at this. Completely kind of different thing going on here. Again, 3 waves down, right? But then it looks like we've got a 1, 2, 3, 4, like we're getting a 5 here. We've got this big movement here, which we don't have on the Dow or on the SPY, right? We got a little bit of one here, but we have this, if we were to measure this out here, that swing high is only 123.6. And usually a wave C is 123.6 or 100% of A. So that's why I'm defaulting to this being potentially a 3-wave rally. If we look here, though, right? If we look here, we have a 1, 2 here. And you can see we rally over here to 2618 above that, right? So when you're looking at wave 3s, 1618 is usually your first extension, 2.0 is your second extension, 2.618 is the third extension, right? A common extension, and we're kind of up there. So it looks like 1, 2, maybe 3, 4, 5, right? A big difference in this compared to, again, SPY or even the Dow, which has even a bigger move up. The Dow was the first one to break. Remember, I told you guys, watch this mid-August to 22 swing high. That was the important area. In Bitcoin, that's that 25,000 level, that last lower high on that market structure. But that was the place to watch for all the charts. And the Dow hit it quick and fast within a few months. Everything else kind of took a bit longer to get it. They kind of consolidated below it here a bit before breaking out. But they all eventually broke out above it. Again, keeping that as a 3-wave decline, right? Let me see here. Trying to go through charts here for you guys. Sol, look at Sol. Look at Sol go. Again, this is the same chart I keep pushing out there for you guys. I keep adding to it. Sol, what I was talking about earlier, the difference between Sol and Link is that Sol had this capitulation move down here, December of last year. Again, right here, just so you know, that was what I said. You can go look at the Wendy show, the archive for that. You'll see it. It's in there. I'm not BSing you guys. But anyway, this right here, this is the accumulation. So we had this capitulation low here, quick rally up, and then we went to accumulation here. So we got a nice long bit of accumulation leading to this strong big push out. Originally, I was looking for a potential rally up, locally here, maybe even into this box, and then a pullback. But like Bitcoin, right? Like Bitcoin right now, we got this sideways rallied up and continuing to break out higher. We're not pulling back, right? So let me get back over to Sol here. Same idea happened right here. Accumulation on the rise here, and then boom, the pop out. Then we came back, we retested this supply as demand. Boom, here we go, popping out again. Based on the 1-2 here, wave 3, at minimum expected target up there around 78.25. So we'll see if we can go ahead and get that. But again, everything here is screaming accumulation to head up. And this is that one again I gave you December 30th last year, right there. So if you're paying attention, congratulations. If not, it is what it is, I guess, right? Link. Here's the link chart. We'll talk about this one real quick as well. I'm trying to get you guys as many charts as I can here. What's going on? Oh, come on. TradingView, work with me. Work with me. Come on, baby. Ah, there we go. All right, all right, all right. Again, see the difference with Sol and with Link here? Sol had the capitulation, then bounced back up. Sol just kind of went sideways. 491 days, guys, of accumulation. No wonder continue rallying higher, right? Look what it did right here. It went sideways into that, just above what became that next daily pivot, and then now it's taken off again. So again, like Bitcoin, you have your jump across the creek on your breakout, right? And no real pullback to retest previous resistance and support, right? It just kind of rallied up here, did some accumulation locally, stair-step accumulation here, boom, popping back out now. Right on up there, right? Right now it's kind of hitting this little bit of this high volume node here. But yeah, looking for this thing to continue up higher. Just a general target around 23.79. But I think we kind of go further than that overall. Yeah, I mean, it's really, we just kind of stopped right here. I mean, it makes sense, right? Look where we got resistance right now, kind of printing a doji. Previous area of resistance and support, right? Makes sense. We're all good. But again, if we can get this breakout higher, looking for it higher here. I mean, if we look right here, let me see. I think this is the swing low. 57.37, 57.40. Yes, this swing low here. So you get like a 1-2, right? You go 1-2 here. This looks like 1, 2, 3, 4, 5. So this looks like it'd be like a 1, 2, maybe a 3. We get a pull back to 4, and then we get a 5 on the breakout. Again, everything else aside, trading pivots. Remember what I told you about trading pivots? You come in sideways between the pivot and the R1. You ratchet up without actually coming back to the pivot here. You just kind of do some sideways and ratchet up. Most often, you're going to see the R4 or R5 pivot. So very, very bullish setup structure here that I've already talked about and explained earlier, showing up on Link here. So I would expect that to kind of continue to push up there, right? Let me see here. Oh, let me kind of keep up with you guys here. What won't work and keeps freezing there, Droid? Let me see. So that was Sol, that was Link, Litecoin. Oh, Lord have mercy. TradingView is just having a day of it today, aren't we? Or a morning of it anyway for me. Reload that tab again here real quick. I think that's the one I want. Yeah. All right. So Link or Litecoin here looks like we had a leading diagonal into a 1-2. Looks like we get a 3 and then a triangle for 4 over here. And gotta get that up over there. There we go. And then a 5. We pulled back 78.6, and now it looks like we're rallying up. We want to see a breakout above $99.60. If we can get that, that adds confidence to this wave 3 target up here at around $313. Not the all-time high, but near up there. We usually look for 5 waves up around the most often around the previous swing high. So that would kind of get us up there. Locally, we had accumulation right in this area. As you can see here, we had our preliminary support. We have our selling climax automatic rally. It pulls back. Last point of support, it couldn't break down below the swing low and for the spring. That tells us it's really bullish. Again, we get the big pullout, the breakout. So you get your jump across the creek locally here. You pull back up the edge of the creek, retest the range resistance as support. Boom, rallying back up. So I think, overall, we continue higher from here. Overall, I think the daily should hold this support. So even if we were to get a pullback to it, we would, my expectation would be to look for on a smaller time frame. This is the daily. Will look like on the 1 hour, 4 hour, reason to go long and follow that up higher there. So Litecoin kind of followed up behind Ethereum, right? Yeah. Let me see here. What is my view on this next bull run being a super cycle and then a lengthy bull run cycle after that? You mean a lengthy bear cycle after that? Is that what you mean? Because if this is a super cycle bull run, it's going to mark the top for a bit. It should mark the top for a while. And I think that's a good possibility, but I'm open, right? And so technology, right? If we look at technology, technology is disinflationary, deflationary, right? And we have a lot of technology coming in, technological advances, AI, all this stuff, right? So I could see a point at which maybe that kind of changes the way the cycle works a little bit, maybe. But overall, technological advances, we think in terms of computers and AI right now, but these are things like the cotton gin back in the day, right? That was a big technological advance. So comparatively, there are these things. But yeah, I mean, my thought would be treat this like this is the bull market, the final, for a while, until it proves it's not. The good thing about trading, guys, you can make money whether the markets are going up or down. I don't think a lot of newer traders really grasp that concept. They're fair weather traders. They come out when the market is looking really, really bullish. And so they don't get in at these lows, right? They don't get in, down here at these lows. They get in maybe here or way up here when we hit new all-time highs, right? They're not getting in, down here and down here and down here, right? Fair weather traders, that's what most people are out there. And so, but the reality of it is, even if it was to be another potential depression, like a global depression type thing, and the odds are, if it is that, it's probably lasting 40 or 50 years at least. That doesn't mean it goes down for 40 or 50 years. That means it goes down strong at first, or maybe even overlapping. But overall, most of the time, it stays sideways, is what that would mean. A lot of money to be made. A lot of money to be made, okay? Let me see here. Yeah, Kimasabi. Yeah, the 1-2-1-2 is a lot more mainstream than the diagonal. So yeah. So that's why we default to that, right? Diagonals aren't as common, right? And so we consider them to be the exception to the rule. So again, usually I want the, if it could be either one, usually I default to the 1-2-1-2 and just keep an eye out to see, okay, well, if it is a leading diagonal, are we getting the rejection where I would expect? Now, obviously, once it goes, once the, wave 3, if you think it's a diagonal and wave 5 continues, what you think is wave 5 continues going up to the point that wave 3 is the smallest of 1, 3, and 5, well, then obviously, we know it's a 1-2-1-2, right? And what you think is 5 is actually 3 of 3. That's another way, of course, of going about it for sure. Let me see here, guys. Oh, we're just about done here. You guys got requests this time, huh? Let me pull up AVAX here real quick. I might only be able to get to one of those for you. I see somebody else has got a request there too. It's almost 12:30 here. Ooh, I gotta go. Got to get ready for our mentor session. Oh, look at AVAX. It's nice book. Yeah, nice. Structurally, if you look at this swing low to swing high, that gives us a target up here of about whatever that is up there. What is that? 16.5 almost. So yeah, I think we go up there locally just based on this right here. We could at least hit 15, 18 based on this pullback here, at least. But overall on AVAX is one I've been talking about for a bit. Overall, we had expansion into contraction. We had this wedge here, and we broke out on volume and candle spread. So, I mean, I think that bottom's probably in there, and I think we overall just continue to rally higher. You can see where this target is right around this higher volume node. So, when it pulls back, I'd be looking for a 50% pullback, and then you go along with that for a wave 3, a nice big move up on AVAX there. Let me see here. INJ, Injective. I think it's Injective, right? Oops. Let's see here. By the way, those of you who are there in our group coaching, I put a couple of hot takes up this morning. If you guys paid attention, I did a stock in a crypto there. Let me see. Okay, so this is the chart I had. It looks like wave 4 pulled back further than what I thought it would. So we got like a wave 1, 2, and then a 3, 4 pulled back further with that dip yesterday. Let me zoom in a little bit here. That's the 3-day. Let's get down here to the daily. So yeah, you get like a 1, 2, 3, 4, 5 gives us 3, 4. That pullback. Get a triangle here for 4, A, B, C, D, E, probably something like that. Yeah, see that 1618 right there. So based on the height of that, then wave 5 coming in potentially right around $20.51 or so. We'll say $20.50, nice round number. That's where I'm looking at it now. Now, this could still be over. A lot of these guys are getting big moves up. They could be overextending. So it could go higher. But right now, based on this count, that's where I'd be looking. If we can get a rejection in that area. Oh, man, that's beautiful. Look at that. Right into that demand structure, right around the EQ, it looks like. Oh, look how beautiful that 38.2 is. Oh, man, that is absolutely gorgeous. You'll have to forgive me. I get excited about stuff like that. So, yeah, if we can get all this, guys, going up here. Yeah, we get that pullback around $15.13. If we get rejected at $20.54 or so. And then we kind of come up around $23.73 on Injective there. So it looks really good. But yeah. Okay, guys, listen, it's after 12:30, so I got to get out of here. I tried to share a lot of charts for you guys. Like I said, man, if you guys are interested in stuff, if you really want to learn to forecast, if you want to do what I do and, get in at those real lows and get out at those real highs, and actually learn how that works, join us at members.texaswestcapital.com. We got professional trader education there, guys. I'm working on something big at the moment. Had an incredible meeting the other day. And you're going to want to learn how to trade for that. Such great opportunities. But you can join us there. It's our group coaching we do. Or if you just want to get the Bitcoin chart, the E-minis chart for the S&P and the Euro USD chart updated multiple times every weekday, you can do that as well. We've got a few seats left at the $11.99 a month price. But once those are gone, that price is going to go up. So we do have all that in there. And of course, we have a mentorship program, guys. We'll be launching phase 2 of that. We've our first year, we're just about coming up on our first year. On the end of that, we learned a lot, and we're adding in and changing up a few things. So if you're absolutely really serious about understanding cycles, psychology, emotion, just absolutely everything about trading, you jump in on that. But you'd have to send me an email on that, and I can let you know more about it. It's not cheap, guys, but that's because, again, you got to look at, a lot of people, they buy things based on price. You absolutely can't do that in life. I'm going to tell you, this is your life hack, guys. Buy based on value, okay? A broke mindset looks and goes, what's the price? A wealthy mindset, or somebody who is going to become wealthy, often looks at it and says, okay, well, there's the price. What am I getting for that? And if they determine that that value's there, but maybe they don't have the money right now, they bust their butt to make that money to get it, right? One of the biggest life hacks I can get you is how you view buying and selling. And that is going to have a huge impact on how you trade as well. Because if you understand value versus price, it's going to give you a lot of keeping you from necessarily screwing up when you think you want to FOMO in, or you think you're going to just sell because everybody else is selling and you're not sure what's going on, right? So something really to kind of keep up there. As always, remember, the only thing you control in the market is how much you lose. That's it, guys, okay? So with that in mind, risk management is the most important thing you're going to do day in and day out as a trader every single day. If you have not taken it seriously up till now, this is your wake-up call. Do it. Other than that, one last point of advice is don't take a trade just because there's a chance. You guys spend way too much time wasting money doing that. You make a lot of losses. Even with proper risk management, that's still money you have to make up before you can increase your capital account. Look for higher confidence trades. Again, something we teach religiously at TWC. Look for multiple areas of confluence, things happening that suggest you are more likely correct than not. That's when you enter. Not just because there's a chance. Because when there's just a chance, you guys are going to lose a lot of what you are making along the way, okay? I hope you guys have an amazing weekend. Y'all trade safe. If you're in the mentor program and watching, guys, I'll see you guys in about an hour for our weekly session, okay? Y'all take care. Thanks a lot for joining in, everybody. Take care.